So, I know you've all been waiting for this particular session, not just because we are thinking about innovation day in and day out, but that as we live and breathe payments innovation, we're always looking for analogies. Maybe it's that part of me that likes to go and read the last page of a book first, but looking for the patterns in those that have come before us can give us a sense of what to expect, what to steel ourselves against, and how to best be prepared. And so looking up at the stars is one of those ways that I think we can think about the aspirations of the payments space. And so, aptly titled, we bring you the payments space race. I am excited to be joined by a panel that has the benefit of living and breathing these issues. And so I'm going to get out of the way in a second and let them take it away. But before I do want to set the stage a little bit. In preparing for this panel, it gave me an excuse to really tap into my inner child and think about, the lessons that we were taught about the American space race and the way that we as a society banded together, looking upward, joining forces. We had academics, scientists, technologists, educators, all with a common purpose, not just to get to the moon, but I suppose to win, as many of us recall. It was a big part of that narrative. And so that combination of forces was really necessary to get us upwards to vault a rocket. And I think a lot of the things we're talking about in the context of the space race from a payments perspective is much the same, how we all join forces and get to that place together, because the ambitions of this industry are, as we all know, very lofty. And so I'm excited to bring to you Joe Longo, the chair of the Australian Securities Investments Commission, Katherine Adkins, who's the chief legal officer and chief compliance officer at Affirm, Wade Arnold, the co-founder and CEO of Moov, and Sara Sharma, the VP of product management and Fintech at Intuit. And so I think you'll quickly see why this combination of forces is going to help us really explore this topic in a really thoughtful way. So kicking us off, Sara, Intuit isn't traditionally thought of, or at least for those who aren't sort of in this space day in and day out, as a payments company. But in many ways, it very much is. You've got the benefit of a wide array of offerings, whether it's QuickBooks Money, QuickBooks Payroll. We've got Credit Karma Money, TurboTax, 5 days early, and the list goes on. You're moving billions of dollars in payments annually. How do you think about that opportunity to solve a payments problem for your customers? And how has it really changed the way that Intuit thinks about itself as a company?
Yeah. First, thank you for having me here. It's great to be joined with this panel. And to your question, yes, you're right. Intuit isn't branded as a payments company, but in reality, money movement is the connective tissue across our ecosystem of 100 million plus customers. Now, when you zoom out, everything we do is to help small businesses and consumers to make and manage money decisions. They vary from getting paid, to paying others, to building credit, to saving more, to staying tax compliant. And we do this through our suite of products across QuickBooks, MailChimp, Credit Karma, and TurboTax. And if you really look deeply, payments are the atomic unit which makes all of this possible. And in the last financial year, across our product lines, we moved more than a few $100 billion, and that scale changed how we see ourselves, not as a software provider, but as a financial platform that helps our customer make these money decisions. Now, from a small business perspective, the friction isn't only in moving money, it is in getting paid, getting access to capital, managing their back office operations. Similarly, on the consumer side, the challenges are getting faster access to their payroll or tax refunds. How do they know when to pay down their debts, which debt to pay down, how do they save more? So we have shifted away from building bespoke products and features and have started building financial workflows that unify identity, data, AI, and money movement into one. And in short, we have stopped treating payments as plumbing and have started treating it as a core customer value driver and a data flywheel. And that mindset has fundamentally changed how we operate. And looking forward, payments and money is one of the top priority for us.
I love that. And I know a lot of us in this room are always thinking about, what makes this company sort of have unique value. And as time goes on, I think money and money movement is becoming a core tenet to so many operations. Katherine, there was something really interesting that Sara just said about sort of solving problems for customers, right? Sort of being at the heart of it. And I know that Affirm has been really clear about its mission to deliver honest financial products that improve lives, which is a noble goal for sure. How do you think about the role of the consumer as it relates to sort of Affirm's product building initiatives?
Well, the consumer is at the core of everything we do, literally everything we do. It's part of our mission. You stated the vision, it's obviously there. And we solve problems with the customer in mind over and over and over again. And in that process, we believe that we are doing it in a unique way that is beneficial to the consumer and unique in our ecosystem of BNPL. Customers know up front what they are going to be charged and how much they're going to have to pay every month. It's all disclosed. We don't have any late fees. We don't do any sort of fine print kind of approach to consumer credit. And we think in the process of doing that, we are benefiting the customers in our ecosystem in a very unique way. We also underwrite every transaction, which is very different. So if you can imagine you're buying something online and how quickly that has to happen, because we underwrite to the transaction. And because we don't charge any late fees, that I want to emphasize that because it's so important to consumers. We believe they can pay us back because we have no incentive to underwrite them to not pay us back because we don't get paid. We are really excited about what we're doing, and one day we hope that there are no late fees anywhere in the consumer finance space. It's probably way off into the future, but that's our goal.
And so I think it's fair to say that this idea that sort of the interests of consumers and innovation being at odds is a bit sort of, maybe an outmoded view.
Absolutely. You said it better than I could say it myself. I think they absolutely coexist. And I think if you try to do the right thing by the consumer, it forces you to be more innovative because the status quo benefits from consumers maybe not having the best experience. And so if you have that at your core, you're forced to be innovative because it's different. You have to be different.
So the consumer sort of is fueling that innovation.
We believe it does. Yeah.
Absolutely. Okay. So Joe, you're the guinea pig on the panel. We have our regulator on the panel, which means we're now nice and balanced. Kidding. Want to make sure we're getting your perspective as the chair of ASIC. You're seeing the payment space race playing out in a lot of different fronts, no doubt across industries, product types, even geographies. There's definitely a lot of talk about sort of the need for harmonization of global standards so that we can really create sort of a means by which companies can compete globally. From your perch, are there lessons to be learned from the way that competition is playing out, whether it's in APAC or otherwise?
From a regulatory point of view, our objective is to encourage competition and a wide range of options for consumers. In Australia, for those of you who've been to Australia, we're great adapters of payment technologies. And indeed, as we speak, the Reserve Bank and fellow regulators, we're looking at broadening the range of payment facilities and avenues. Indeed, it's the other way around. The part of the policy issue is that we have a regulatory framework that encourages that innovation and new products in the market. And so recent legislation has been passed and more legislation is coming to make sure that continues, that competition continues. So I think we've heard a lot about consumers. I think consumers will benefit from that. So that's where we stand on competition.
Competition is another form of fuel, right? Promoting innovation, but meanwhile creating that environment where companies can.
Yeah, well, we hear a lot about the consumer protection and the need for the interest to be observed, but the innovation can't really be expected to happen confidently, and for investment in that innovation to happen confidently if the innovators don't see a pathway to their product being commercialised and licensed. So that the licensing regime in Australia around payment systems is about to change and broaden. There's been a lot of controversy about surcharges, and the Reserve Bank is leading the way there. Depending on what payment facility you use, you get charged for it in Australia, or the merchant has to absorb the cost. So I think there are some interesting policy questions about who bears the cost of these services, and to what extent is that cost transparent to the consumer.
I'm hearing a theme here, which I like a lot. Wade, you've built Moov to modernize payment rails from the ground up, and you've got early stage fintechs to over 1,000 financial institutions, which when I learned that, kind of blew my mind. So what common patterns are you seeing in embedded finance that customers are demanding that really is calling for modernization of infrastructure?
I think payment choice is the biggest driver. So consumers lead the way. Consumers work at businesses too. And so what we see the most is just combinations of existing payment rails and enabling them for different use cases. So we recently partnered with PayPal so you could pay your mortgage with Venmo. If you go to the market and you say, would you like to pay your mortgage with Venmo? Probably, you get no hands. But if you say, hey, you could make one of your car payments or your mortgage payment with your excess balance in Venmo, would you like to use that one time rather than a fee to get it back to your bank? Now you're really excited about that. Or with one click, you can open a bank account with Apple Pay. Those are not necessarily like modalities that if you went to the bank and said, hey, your customers really want to open an account with Apple Pay or get a loan through Google Pay, nobody would say that their customers want that. But when you give that option to them, then all of a sudden the consumer speaks and starts using kind of these combinations of different payment rails in ways that you wouldn't have imagined they would use.
And so in some ways, you are not just sort of channeling the voice of the consumer, but you're kind of anticipating where the consumer might want to go. And meanwhile, I think being really thoughtful about ways that you can present those modalities, maybe in an embedded context that results in different behavior.
Absolutely. So giving consumers choice is kind of what we're built for at Moov. We're not a payments network, but we partner with all the payment networks so that we can move money however that end user wants. And I think historically, maybe you stick to wire and ACH because you fundamentally don't know what percentage of people want to have Visa Direct as a way of getting that money rather than an ACH. So you just don't do it. But if you enable all those features, our job is to make it easy for you to enable all those features, then the consumer can decide whether or not they want to use Visa Direct versus somebody in a big office building deciding what their consumer actually wants.
Different kind of empowerment. So Katherine, we've got the, payments is global, and I know Affirm is expanding into lots of different markets. I wanted to ask, sort of beyond the US and the UK, I know there's been a recent announcement of a launch in Europe, Western Europe and Australia. The world's your oyster, it seems. How do you keep, sort of that regulatory complexity at the fore without letting it stymie your efforts to grow and expand?
Oh gosh, wait, no, just laughing. Sidebar, but look, I like to think of it as a patchwork quilt. But the overarching symbol in the patchwork is maybe a star or some patterns, some themes. The themes are the same across geos, whether it's in the US, the States, Fed, internationally. Everybody wants to do right by the consumer. So as long as your North Star is doing right by the consumer from a product development standpoint, you're probably going to be okay. Obviously, there's a million nuances in the doing it right part. And to your question, Sarah, how do you keep track of all of that? It's a challenge, you know, but it's doable. You have people dedicated to it. You share information. You partner with your product team, and you let them know as much as you can well in advance that changes are coming. You know, the regulatory environment in Australia has changed recently in my industry. So what are you going to do when you enter Australia and there's now new regulation? Well, you're going to look at them and you're going to make sure you comply. That's the same across the platform. But I don't want to make the task a small one. It's a large one. But we really do start with the North Star of we're going to do the right thing and treat our customers fairly. And then the details of how that plays out so that you're regulatorily compliant may vary by jurisdiction. But I think overall you're also okay most of the time because you want to, the second piece of it is develop relationships with the regulators, right? Regulators, to your point of people who work in companies or consumers, I mean, regulators are people too, right, Joe? And so, you know, get to know the regulators, have them get to know you, have them understand your products, sit and walk them through it. And we have found great receptivity with that sort of approach. So it's both. You got to know your stuff, and you got to develop the relationships.
So I think you said that rather beautifully. And I think keeping those with the anchor in mission of consumers first, I think it's easier to make sense of it all, for sure. Wade, you've got a company that didn't exist 4 years ago. Now you're moving billions of dollars in payments each month. How do you think about, and this is, I think, a unique challenge for fairly young companies, that engagement piece with policymakers and regulators that Katherine mentioned, right? When you're a company that's been around the block and you've had the benefit of history and lots of opportunities for touch point, that might look different. How do you think about that engagement with policymakers as a younger company?
Yeah, I think first I called Chris 4.5 years ago and said, hey, what do you think about this idea? And thankfully he invited me here today. But one of the big things we did in the first 10 hires is we hired a former OCC examiner onto our compliance team. And to this day, we don't always agree, but it put somebody that can interact with regulators on our team so that we could really decide what fights do we want to actually fight, and then also have that intimate context of how the OCC thought on staff. And that allowed us to prepare ourselves better to be able to, you know, work with financial institutions, the OCC, the NCUA, and come from a position of not reaction, but a position of strength as a startup. So we would show up with all the audits and all the documentation and everything ready to satisfy those needs. And then, you know, really meet the regulators where they're at. So I think we've learned to not try and leapfrog regulation in the United States, or you get a crypto winner, but meeting them, and then once you earn the right to be listened to, then you can start sharing where you want to go. You know, it's kind of funny that we're in the AWS building. My last company was a digital banking company that was built. We were one of the first fintechs in AWS. And so just explaining to the OCC, you know, where permission data was at when it's in this cloud thing, very scary. When the regulation actually said, you need to be able to go show me which physical hardware or hard drive that PII data resided on. And so going through that experience and learning kind of as you mentioned, if the intent is to actually be safer and more secure, and take care of the consumer, every regulator agrees. Now it's a question of how do we kind of get everyone up to speed on how we're going to meet that intent of taking care of the consumer and protecting their data.
So I heard a couple things there that I think are really important lessons for us to all sort of hold fast to. So one is make sure you've got people on your team who speak regulator, which sounds small but can be huge. The second is being really mindful of the way that your regulators are going to contextualize what it is you're doing, and maybe sort of a consumer-first mindset is a bit of a bridge there in terms of being able to sort of bring it back to, as Katherine said, sort of first principles. And so while we might have differences in how we read a requirement or a black letter sort of requirement, if we can ground it in that, maybe that helps us break the logjam. Does that feel right?
I think that's perfect. And as you said, if your North Star, right, if when we were inside of AWS and we were told to get out, then you had a real conversation of like, really? Do you want the Amazon team running the edge routers and cybersecurity, or do you want me to hire a person and buy a Cisco switch and try and figure that out myself? But it wasn't about the technology solve. It was about the security of the end user and their data. And if you could keep the focus on, we agree about this. We agree we want to keep the consumer safe. Now how we do it, let's hit a whiteboard and we'll explain how the cloud works.
All right, Joe, it's time to bring it to you so that you can take it home on this point. So we've got lots of different sort of, risks that are being weighed, other factors like global competitiveness and innovation. You touched on that. How do you approach these risks in the context of payments where the technology, as we all know, is moving so rapidly?
Well, we share that responsibility with the Reserve Bank, and Reserve Bank's running a couple of pilots relating to stablecoins and other, and they're the frontline regulator on surcharging of these systems. But I think what the really fundamental point to make is we all want the same outcomes. Now, from a regulatory or prudential perspective, we will bring a different lens to that. But what's really important is that we actually all want the same outcomes for consumers. And I think it behoves regulators to engage. And what I've heard is that obviously is what the private sector seeks to do with regulators. So I don't think there needs to be any great mystique here. If we really want to do the best thing for consumers and in the public interest, then private and public have got to come together and really understand these technologies and how they can be harnessed to make the economy more productive, to make businesses large and small and consumers be able to transact to more confidently and more effectively. But if there's one thing I've really learned, particularly over the last few years, is that regulators have got to engage with the technology and make an effort to understand it. And secondly, to understand the commerciality, the commercial context in which that technology is developing, because in the end, that's what, certainly my job is to encourage confident participation in the economy. So I can't do that with my head in the sand. I've got to not be frightened by the technology, and I've got to invest in understanding it. Having said all that, there will be times when the regulator is going to come up with an inconvenient answer. It's going to add cost to the process, and that's on the regulator. But in the end, what's really important is we want the same outcomes for consumers.
Do you think it helps when the technology is framed around those shared objectives you mentioned? We all, I think we're all aligned in this idea that the point of all this is not to just launch a rocket, right? It is really about service to the consumer, solving real problems, adding and delivering real value. Does it help the sort of dynamic of the conversation from your perspective when the company comes in and says, not just here's this bright, shiny thing I'm building, but here's the problem I'm trying to solve, and here's how I think it benefits?
Well, I think that's a very productive perspective. At the end of the day, the role of the regulator or the Reserve Bank is to understand what you plan to do and to make a decision about whether it should be allowed to be done. And that means having a deep understanding, particularly of a new technology that's been untested or relatively untested. You can't form a risk assessment of it or say anything sensible about what conditions the introduction of that technology should be imposed on without understanding it. Now that's a non-trivial process. I mean that could require hours or weeks of engagement of one form or another. But in the end, as I've said a moment ago, we want a safe, resilient payment system, whatever it might be, that everyone understands. And I think the key word here is trust. The consumers will engage with the technology if they trust it. And I know in Australia with artificial intelligence technologies, Australians are a bit ambivalent about AI, and hopefully that'll change. But what's underlying that is trust. So all of these payment systems will be used if consumers and businesses trust them.
Trust is a really, really powerful thing, and I think that requires a kind of repeat play, right? And it's not just about a single interaction, but it's a series of interactions and opportunities for us to build that together. Sarav, I'm going to ask you to look into your crystal ball. I know you're capable. I'm very confident in this. As you think sort of ahead, what do you think will matter most to consumers and small businesses? Is it payment velocity? Is it control over rails? Is it something else? How do you think about that?
Oh, I think that's a great question. See, I have always believed that velocity has been the North Star of money. From ships carrying gold across oceans to paper IOUs to faster money movement rails to stablecoins. Every evolution of money has been about how do you move value faster with confidence. If you have owned a small business or you know somebody who owns a small business, you know that cash flow is the lifeblood of the businesses. And faster money movement could mean business survival. Similarly, for consumer, it is a difference between stability and stress. And this is one area where we are also actively working towards seeing if Federal Reserve payment rails can be opened to qualified and regulated fintech so that we can bring this benefit to both consumer and small businesses. Now, given this context, the fundamental need of velocity is not going to go away. It is actually becoming a default expectation. What many other companies have already done it by abstracting that complexity, by bringing those customers into their network. How do you open that network so that everybody can make those payment and payment not only moves, but settles instantly? And one of the, as every payment becomes instant, what will start differentiating the experience is going to be the agency and intelligence. What it means is that money not only moves faster, but it starts moving smarter. This is where I believe over the next 5 years, agentic payments would play a significant role, where money would move on behalf of a user under a set of trusted constraints. Now, you can imagine a small business who is able to make a bill payment that is made by selection of a payment instrument that optimizes their cash flow. Or a consumer who not only gets faster access to their payroll or tax refunds, but is able to pay down their debts smartly, is able to know how do I save more. Therefore, with the intersection of, we are at a very unique point where the intersection of stablecoins, AI, intelligent orchestration, faster money movement rails is going to accelerate this trend. And I strongly believe that users would have agency over when, where, and how the value would move. So to summarize, velocity is what got us here and will continue us going. But agency would define what comes next. So I strongly believe the future of money is not only going to be fast, it is going to be self-directed. And that's what keeps me excited about this space.
It's hard not to get excited hearing you talk about it. All right, so in closing, I'm going to ask each of our panelists to, in a single word, it's going to be hard, a single word, what adjective would you use to describe this moment in payments? It can be a feeling, it can be a sentiment. Sara.
I'm already excited, so exciting is what I would go with.
Katherine?
Warp speed.
It's hyphenated, so one word, okay. Wait.
You don't get kicked off.
I'm off the
Agentic.
island.
Mine would be agentic.
Joe, how would you describe it?
Choice.
Ooh, okay. I hope that you all have enjoyed this this conversation as much as I have. We are definitely going to the moon, so please thank our panelists.